Is China short on cash? Beijing has tweaked its foreign exchange rules. It wants foreign investors to buy Chinese bonds. Reports say China is opening up. But why do the Chinese need more money? Our next report tries to find the answers.
China, known for trapping nations through debt, wants a loan. Earlier this month, Beijing announced that it will tweak its foreign exchange rules. Foreign investors can now invest directly into Chinese bonds that trade on the exchanges. What does that mean? A government or company issues a bond when it wants to raise money. Those who buy it are extending a loan to the borrower. Just like stocks, bonds too can be bought and sold on the exchange. China's bond market is valued at a whopping $16 billion. It wants more people to invest. China is opening doors for foreign investors. But why? Does it need more money? In recent years, China went on a spending spree, borrowing money to build cities, help businesses, and support financial markets. But was Beijing cutting checks that it cannot encash? Experts have raised red flags over China's debt-fueled boom. In 2017, Moody's cut the debt rating of China. It was the first time that China was downgraded since 1989. The latest numbers suggest that the situation could get worse. China's banking system is under pressure. Asked by Beijing to save the Chinese economy, China's banks had to forego $211 billion in profit. The money went towards cheap funding, payment deferrals, and more lending. Beijing has put pressure on the banks to lend more money. Loans and advances at the four big banks of China rose by 7 to 10%. They are giving out more loans, even when bad loans are on the rise. According to numbers posted in May, the level of bad debt at Chinese banks has touched an 11-year high. The non-performing loans, or non-performing assets, at Chinese commercial banks crossed $360 billion. Money seems to be in short supply in the Chinese economy. Chinese households hold about $13 trillion worth of bank deposits, but it's the government that needs more cash. In July, the Chinese government began mulling new special bonds, an instrument that would allow local governments to borrow up to $220 billion. Private banks need more money too. According to one estimate, small banks face a shortfall of $349 billion in capital. Beijing can't keep paying all the bills, so it is opening the doors for foreign investors. China could be caught in a debt trap of its own, and it is borrowing more to get out of it. Bureau Report, WION World is One.